oh my gosh, rates continue to rise.
Hey guys, how's it going? So glad to be back for Mortgage Mike Speaks podcast. I think we took a little bit of time off.
A little bit, yeah.
Yeah.
Summer, July.
Yeah, little sabbatical.
Yeah, a little bit.
I know everybody's traveling right now, so
Yeah.
we're getting back into things. And this is Mortgage Mike Speak podcast. If this is your first time, this is Mortgage Mike here.
And this is Steven Salinas.
Yep.
Yeah.
And we're partners here. We want to be sharing just stories of transactions, sharing tips and tricks for,
Buying a house,
Buying.
getting through the mortgage process, whatever it is. We've got
Yeah.
a lot of experience getting people into homes, and our job is to guide you through that process, and that's what we do. So we're your experts. You don't have to
Yeah.
worry about it because we've got everything taken care of on our side for you.
Yeah.
Yeah.
So Mike, what are we talking about today?
Well,
Like,
I think what are we talking about today? We can talk through market updates, or
Mhm.
we want to talk through that. Okay.
I'm sure everybody's very curious
Yeah.
about what just
Yeah.
happened
For
this
sure.
week.
Yeah, and actually, I've got a client that really just reached out to us today
Yeah.
as he's shopping for a home. So a little bit of backstory. I think the consumer, or anybody's mindset for that matter, is that, oh my gosh, rates continue to rise.
Mm.
And so back in June, the Fed raised their federal fund rates, right, by what?
0.75.
0.7, yeah, 75 basis points. And that happened while I was on vacation. So Stephen got to deal with that fun.
That was fun.
It was so much fun, right? And I will say that at that point in time, we saw an increase in rates, like yet again, another increase in interest rates. Ironically, with the recent Fed increase that we just heard this week of another 0.75 of a basis point, the truth is rates didn't go up, right? So,
Yeah.
when talking to our client this afternoon, literally about like, gosh, is this the right time to buy a home, and where are rates going?
Yeah.
The whole discussion centered around, well, let me just tell you what happened. That the 0.75 of a basis point rate increase that we just heard was honestly a non-event.
Mhm.
Although in the consumer's mind, they're thinking, well,
Once again.
yeah, rates are going up or whatever it is. And it's like, okay.
Yeah.
But if we look back to where interest rate market was in July when you got to deal, or June when you got to deal with the first 0.75 of a point bump, the truth is today, actually the price and the cost of the rate is better than what it was.
Yeah.
Right. So I think for most people's mindset when they listen to the news and hearing, oh, rates are increasing, what they don't understand is that mortgage-backed securities, which set interest rates for us and for our clients,
Yeah.
don't necessarily track the same way.
Mm-hmm.
And we're seeing that happen right now. So, and the other thing I'll say, just from a market update standpoint, would be the idea that we're in a bubble. Because that was the two concerns that he had.
Yeah.
One, where are rates going? I think that they're higher, and I'm like, well, they're not.
Mm-hmm.
The other thing was, well, what's happening in the marketplace? Are we in a bubble? Are we going to see housing prices drop?
Yeah. I think a lot of people are kind of afraid of that.
Right. And so, but I don't think that's the case, especially in Houston. And again, I think when you read the national news, you get this national viewpoint on the East and the West Coast that says, well, we've had these markedly increased prices in housing.
Mm-hmm.
It's beginning to soften. So there's this drop coming, and Houston doesn't play like that.
Yeah.
We're pretty steadily increasing market. We're not like a hyperinflated market.
Got it.
So we're maybe in the last, I don't know, Stephen, what do you think in the last year? Most of our clients were probably going in over list, right?
Yeah, probably everyone.
Yeah.
I mean, if you were active and you were really playing the game, people were going over list.
Yeah.
First-time home buyers is a little bit tougher for them just because of these investors out there that,
right.
That are just picking up all these homes.
Or limited on cash to close, and they can't play the I'm going to go 50 grand over list game,
Yeah, but now it's starting to kind of change.
Yeah.
The people that are buying now, it's really, they need to buy. They don't have to buy.
Yeah.
And really what they're saying is, okay, we can actually negotiate. Not all the power is in the hands of
the seller.
Right. And, if you're still in this market,
it's a good time to be in the market.
It's a good time. If you're looking to move, it's a good time because you have a little bit more in your back pocket to negotiate.
Right.
You can kind of save that extra money that you were going to go over.
Yeah.
To put in new furniture or have it in a safety fund in case things break.
Right.
All these different things. And we've totally seen a shift in what that's looking like.
Right. So I think I don't know where rates are going. We don't know.
No.
They're not higher than where they were in June when the first announcement was made.
Yeah.
The second thing is housing market in Houston, Texas is not crashing. It may plateau, which is probably happening right now. We're going to soften off. Housing prices are going to level off for a little bit. So that means instead of 15, 20, 30 grand over list, we're now going in at list.
Yeah.
And like you said, maybe we can get contributions towards closing costs, which is something that we haven't really been able to get for the last year.
Yeah.
And most of the contracts. So here's the deal. It's a great time to buy. I mean, hands down, it's the time to buy. It's better than renting. Absolutely. Right.
Absolutely.
Rates are where rates are, and you don't buy real estate because of interest rate. You buy real estate because the investment and the gain on that investment that you make. So
yeah, absolutely.
Yeah.